Hey everyone, BigBear.ai is getting a lot of investor interest lately because of the rising effectiveness of artificial intelligence. That's created a boom in AI stocks just like BigBear.ai. So in this video, I'm going to take a closer look at this company and answer where I think this valuation could go 2 years from now by the end of 2025. So I'm going to look at a few estimates, a few assumptions of its key financial metrics, and come up with a valuation estimate, a valuation forecast for BigBear.ai for 2025. So let's jump right into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so one of the key numbers I'm going to need is its current enterprise value. And as of this recording, BigBear.ai is trading at an enterprise value of 552 million. While that's up in recent weeks, it's still down from the recent high. You can see that it was trading at a 1 billion enterprise value around January of 2023, and then closer to 1.75 billion in enterprise value around the middle of 2022, or I should say around March of 2022. So it's roughly a third of where it was at its heights, but it's still getting better. Now, that's because of the rising effectiveness of artificial intelligence and the halo effect it's having for all stocks AI related. OpenAI and large language models like ChatGPT have unleashed this demand for artificial intelligence, and that's created a boom in industry-wide companies like BigBear.ai. But BigBear.ai has yet to benefit from that trend in terms of revenue growth, in terms of explosive sales growth. Nvidia already has, right? And that's what's creating all this enthusiasm. Nvidia's sales increased by more than 200%. Companies like BigBear.ai are waiting for a similar boom in sales. All right, so the next metric I'm going to need for my market value prediction is BigBear.ai, its EV to revenue. As of this recording, it's trading at an EV to revenue of 3.563, and that's again up from the recent low, but still not up where it was in its heights, right? It traded close to a EV to revenue ratio of 12 in March of 2022. It's only less than 1/3 of that valuation currently as of this recording. You might say, well, why is that the case? Why is the valuation down so much? Primarily because of the increase in the cost of capital, right? The Federal Reserve, central banks worldwide started increasing interest rates. The reason they started increasing interest rates is because inflation started to get out of control. Inflation reached double digits in some countries, reached double digits for at least 1 month in the US. And so when inflation is increasing, that means there's too much economic activity for the most part, or a supply shock. In the US, it was a combination of both. There was a supply shock because of COVID, supply decreased, and then at the same time, demand was absolutely soaring because of all the government stimulus that went out into the economy. So central banks, to try and fight inflation, raise interest rates, because when they raise interest rates, the things that you buy that are connected to interest rates, like houses and cars, purchases for those products tend to decrease when interest rates are higher because your monthly payment increases. So when you buy less houses, then you spend less money on furniture, you spend less money on beds and couches and TVs and things like that. You don't hire movers, you might not hire plumbers, etc., etc. So economic activity starts to contract slowly. The same with cars, right? You don't buy a car, you don't buy car insurance, you don't buy seat covers, and you don't maybe buy that subscription to Sirius XM, and on and on. So that contracts economic activity, and that tends to bring down inflation, which is what's been happening at least in the US, right? So, but at the same time, when interest rates are higher, the asset valuation decreases. They're inversely related. Higher asset prices correspond to lower interest rates. When interest rates increase, asset prices decrease. They're inversely related. So for the most part, growth stocks asset prices overall decreased in 2022 as the central bank increased interest rates, and these valuation impacts were more explosive more in magnitude for unprofitable growth stocks like BigBear.ai. So that partly explains why the stock price is down so much off its high, and why, even though it's booming right now, it's unlikely to get back to those levels because interest rates are still, over 500 basis points where they were in March of 2022, right? So there's the big difference between valuations right now and valuations in 2022. So moving on, one of the other estimates I'm going to need is BigBear.ai and its revenue forecast for 2025. The analysts on Wall Street that are following BigBear.ai, they forecast that it's going to deliver 191 million in revenue in 2025. This is a collection of analysts on Wall Street that follow BigBear.ai stock. They submit their forecast, and this is the consensus among all those analysts. So there may be some Wall Street analysts that think Big Bear AI is going to do better, and there's some Wall Street analysts that might think Big Bear.ai is going to do worse. This is a collection of them. This is the consensus estimate of Big Bear.ai's revenue forecast for 2025. All right, so now that we have the revenue estimate and the valuation estimate, we can start to make forecast for where we think the valuation could be in 2025. So we're going to label this the EV, where the EV will be. We're going to label this the EV to revenue because that's the valuation metric we're using. So if the valuation metric remains the same at 3.563 as it was during this recording, and the company indeed delivers 191 million in revenue in 2025, then its enterprise value could rise to 681.6 million. That would be a solid increase from the current roughly 500 something million it's trading for at the moment. Still, if its EV to revenue falls, then its valuation could increase only to 573.9 million, which would be a very modest increase from where it's at today. If its EV to revenue were to fall to 2.5, then the valuation could fall to 478 million. And in the worst case scenario I've modeled here, if the EV to revenue were to fall to 2, then its valuation could decrease to 382.6 million, a scenario that I don't think is very likely. The scenario that I think is most likely is the higher EV to revenue here, the current EV to revenue of 3.563, with the valuation revenue at 191.3 million. So my best estimate of where I think BigBear.ai enterprise value will be by the end of 2025 is somewhere in the range of 675 million and 725 million. The reason I give a range is because we're using a lot of estimates and assumptions, and we don't want to try to be precise when we're using so many estimates and assumptions that are likely to change, that are likely to be imprecise. So there you have it. That's my best estimate for where I think BigBear.ai EV will be at the end of 2025. I'm curious to hear what you think. So comment down below if you think I'm being too optimistic, too pessimistic. Let me know your thoughts. I'd really be interested. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.